Testing, testing. JB here. January 30th, 2020. Going to be really quick. We have 8 minutes, 10 seconds until the open. Uh, First, I'll talk about IIPR really quick there. You see the huge move it's had. Says I had the calls on Friday. Was it in the 70s on Friday? I'd have to go look. But monster move all the way up to 94.88 yesterday. Still holding a couple calls. I may look for some later March 120s or so if it holds 90, 92, 93, because it'll probably, right at the open hit a little pressure. But I think it's headed over $100, back over 200-day moving average. So I think that all bodes well for more highs there. So that's IIPR, OLED, and I just posted a little tidbit in the watch list. You take a look at names, and I'm not going to sit here and try and fearmonger or cause some paranoia or just go nuts around this coronavirus, because everybody else is doing that. So I don't want to do everybody else's dirty work, I guess you would call it. But if you look at some names that are going to have impacts, because when an entire town is closed down, it's pretty much the Chicago of China. If you look in comparisons from the U.S. and China, here's some companies that may be impacted, and OLED's one of them. And I know, of course, Starbucks is that's the no. I wouldn't call it the no-brainer. It's gonna be hard to play anyway for downside. I think OLED's a name. They have agreements and supplier issues if this this closure of shutdown of the town continues. So I think it's kind of one of those names that's under the radar for some possible short-term pressure. You take a look yesterday too, and you had the Apple earnings. Typically, OLED rallies or trades in sympathy to Apple. Didn't yesterday, despite Apple rallied. Universal Display sold off. So I think those all kind of are telltale signals that it's going to continue to be under pressure today. So I added those 180s. Hopefully I get the opportunity to lock some in to cover costs for 100%, and then I'll ride the rest for a possible move into the 170s. What's the 200-day moving average on that? I think it's 184. Let me just, I didn't even look this morning. No, it's 188, excuse me. So the 200-day moving average on OLED's 188. So it opens underneath that. I think it certainly bodes well for a continued move to the downside. That's that. Yeah, take a look at the SPY, and we came all the way down to that. I think it was 322.25 or so on Monday. Then you had the rallies Tuesday, Wednesday, and now here we are. Possibly, maybe testing that before the week's out. So could be a line in the sand. I mean, if the market's done anything, it's kind of showed everybody that regardless of what's going on everywhere else, it's the bots that are in charge, the passive investing that's in charge. People don't care about what's going on in the world because they know that the market's going to continue to march higher. At some point, that comes to an end, right? I mean, who knows when it is? Everybody thought maybe it was 2011, 2014, 2016. Here we are in 2020, and the narrative it's gotten even worse, in my opinion. There's so many more passive robot investing strategies and things out there that it's like the market is less about picking individual names and just riding a slow, meticulous rise to the upside, because everybody's it's just passive investing. It's crazy stuff. But everybody, they'll go on FinTwit or StockTwits or Twitter or what have you, just complain about. They blame it on the Fed. They blame it on manipulation, whatever the case may be. But at the end of the day, we're here trading the market, right? So unless someone's doing something illegal, I'm here to either buy calls or puts, make money on the upside or downside. So if you think it's manipulated to the upside, then why aren't you buying the calls, right? Anyway, just a story for another day, or a rant for another day. It's just mind-boggling. They all go on and they vent, and it's to the point where they, this recent outbreak of this coronavirus, it gets to the point where you almost think some of these people have totally gone way off the edge, where they're going to go over to China and start manually transmitting this virus, so their negative bias can play out across the financial markets. It's just crazy stuff. But we'll see where that all goes. But yeah, 322 or so on the SPY is kind of a spot. I think if that breaks, I'll be probably looking to close most of my call positions and add substantial amount of, or I wouldn't say substantial, but certainly a decent amount of put positions. Amazon reports after the close today, their last quarter, and here's a case of these companies that Boeing's probably a good example. They've kind of set the stage for disappointment. They've already said this is Amazon already said their costs are going up because of the logistics involved in getting the same day delivery, the next day delivery, and things like that during the holiday season. So it was kind of expected. The stock didn't do that well. So now you have this earnings report where negativity has kind of already been priced in. My only concern is this Amazon, the AWS, the web services. So if that shows any kind of cracks in the armor, and Amazon doesn't break it down very well, so it's going to be hard to tell, right? But if they're not able to continue to subsidize their cost, losing businesses in terms of its normal side of the business, I certainly could open the door for some downside. So, of course, I'm probably not going to trade it post pre-earnings. I may look for some opportunities to play it post earnings. So I think if they do well and they post some solid earnings, they can. It looks like AWS is doing fine, not getting impacted by Google and Microsoft. Then certainly it can start to break out again. If not, maybe a little more short-term pressure. Only got a couple minutes left here too, but Tesla, last but not least. I mean, you take a look. The options were insanely priced, so trying to play the earnings on a risk-reward basis, calls or puts, it's you have to hope for a tremendous move. I think it was a $58 move implied at the options right at the end of the day on the straddle. So right now, if Tesla goes, if it doesn't open over 638, you're going to have some premium crush. So you're going to lose money if you had weekly options. Crazy stuff, right? So you could have had the right bias. You could have said, hey, Tesla's going to smash earnings, stock's going to soar, and you still might lose money on the calls. I'm not going to try and play it on the call or put side, but I'll be watching it. Just a crazy story. Facebook, disappointing. The cost, higher expected costs as well with Facebook declining, decelerating growth. I guess declining, decelerating, same thing. So something to watch there. Maybe it comes down to test $200. So I'll be watching that. And I think that's it, folks. We have 1 minute to the open. Let's have a great day. Rock and roll.